Hello, neighbors. Good morning. I am Squealer D, and I am back again. And this time, we are back in the world of finance, and we are working towards learning everything we can learn. I'm thinking today we are going to talk about the different types of stocks. So I've pulled up a couple different articles here. I was a couple minutes late, guys, because I was reading the news. Man, can our news go hard. Sometimes the news doesn't talk about anything, but dang, sometimes the news goes hard. Today, they're talking about all the presidents. All the presidents got issues, guys. Some of the presidents got legal issues. Some of the presidents got memory issues. Some of the presidents just died. Man, those presidents. Anyway, so we got a couple different short reads. They're all pretty much the same. One day maybe we should do news on here because the news matters, guys. I know a lot of people don't read the news because it's too sad, or they don't read the news because it makes them mad, or they don't even believe the news because, that's a thing. In 2023, you can't always believe the news. So, crazy, crazy, crazy. And you have to know the news because current news, for instance, things like Donald Trump being indicted, guys, that'll affect the stock market. I don't know what sector it would affect because I'm not a stock market person. But let's say Donald Trump owns a business that has stocks. Like, I don't know if Trump Towers does. I don't know if he's like in the stock market at all. But if he was, let's just say he owned stocks, guys. Let's say he owned a business called Trump Radiators. And when Donald Trump go to jail, or people hear he's going to go to jail, the stock market is going to change on Trump Radiators. Either people are going to buy more of it or people are going to sell it because of him going to jail. So, as you could see, we do need to read the news. I keep my news down on my bar, and it just pops up. So I know you guys can't see it, but what popped up was something is seriously wrong with Joe Biden. Didn't we know that when he got elected? And there were accusations of him with all different types of bad things going on, guys. There's something bad about every single politician. I think we can Google politician names, and then you can go down the list of Googling those politicians, and we would find something bad about everybody. Because honestly, you can find something bad about everybody. So, I mean, it is what it is, guys. But wow, the news has been wild today. Well, not today, really. Just mostly this week. Like, the last couple days with Donald saying he was going to get arrested. And, that sets everybody in a frenzy when they hear that their favorite or least favorite president is going to get arrested. I don't know how Donald Trump managed to be some people's favorite and some people's least favorite. Like, some people would like to see him burn at the stake, and some people would like to see the rest of the world who thinks that burn at the stake. Crazy, crazy, crazy. But I don't have an opinion. My opinion is get money. I mean, I can't even have an opinion on somebody like Joe Byron, I meant Biden, guys. I saw it I saw it on a video, a YouTube video, and this guy said, "Hey, Joe Byron, take me to dinner." And now I can't stop thinking about it. So I always call him Joe Byron. No disrespect, no more disrespect than is meant. It's just a comedy joke, guys. Don't get bent out of shape. I'm not a Democrat. I'm not a Republican. I'm just Squealer D. D is for dinero, and we're here for the money. That's it. But I'm talking about it because it matters, guys. Things in the news matter. Like, let me pop the news up real quick, and you guys won't see it, but I will. Let me see if there's any headline that affects the stock market. So, dang. Trump faces 30 counts in New York grand jury indictment. Is that what they think, or did they really charge him with 30 counts? gosh, dog. Dangerous storms and tornadoes forecast in the U.S. Midwest. That's going to change the stock market. Bad things happening in the United States, guys. Biden to Russia on detained U.S. journalism. Let him go. Hey, guys, nobody talks about this, but do you guys remember when Joe Biden said, I'm coming for you, to Donald Trump? And then now Donald Trump's going to jail? Man, Joe Biden wasn't joking, guys. If you're ever a bad guy, or if you're a good guy, and Joe Biden says, I'm coming for you, man, be scared. That's all I gotta say. Be afraid. Be very afraid. Okay, so I get sidetracked. I get so sidetracked. A missing Arkansas man found alive on a Texas beach 1.5 years after disappearance. What was he doing? These people, man, people think they're missing and they just left. This guy went from Arkansas to Texas to go live on the beach. Left for 1.5 years. All these people were worried about him, and he was chilling like a homeless person. Actually, I don't even know if that's the story. I'm just looking. Dang, 17-year-old leads police on a 100-mile-per-hour chase. Woo, people's kids. Ooh, a potential giant kraken lair discovered with ichthyosaur bones. Whoa, a kraken. Whoa. Whoa. Sugar Ray Seals brought a gold medal home to Tacoma, and now he's living at Hilltop Shelter. Tacoma is a town in Washington, guys. And I don't know who Sugar Ray Seals is, but he brought a gold medal home from, what did he do? It was in 1972, Sugar Ray Seals. What did he do it for, guys? What was he doing? Was he throwing a ball? Was he jumping? Was he running? What did he do? Did he do boxing? What did he win a gold for? A legendary boxer. Sugar Ray, was that like, is Seals his last name? Sugar Ray? Now I gotta look this man up. You guys see how I get sidetracked? That's why learning takes longer for me. That's why I'm on here. Because oh no. I have all these. Oh my goodness. Hold on, guys. Hold on. I got all of these. Oh no. Oh my gosh. Oh my gosh. Oh my gosh. Sugar Ray. I can't spell. Sugar Ray Seals. Who's he? Let's find out. Who is Sugar? I bet you guys, if you are watching this and you know who Sugar Ray Seals is and you're laughing at me, don't laugh. So he's a boxer. Is he like what you hear about without the seals? Like when you hear about boxing, you hear about Sugar Ray. Did they not say the seals part? Sugar. They just said Sugar. He was only an American boxer to win a gold medal in 1972 Summer Olympics. It's a middleweight. He's 70 years old, guys. This guy right here, Sugar Ray Seals. He fought middleweight champion Marvin Hagler 3 times. He's also the former NABF and USBA middleweight champion. He went to Stadium High School. He's in a movie. I don't know what Kalul is, but he's in a movie. Wow, Sugar Ray Seals. I don't know how famous he is, guys. He doesn't have like big things like he's 4-0. But besides all of that, we know who he is now. We even know what he looks like. He said, I don't know why this, I'm trying to look, but I got this thing in the way and I can't look. It's so annoying. Oh my God. Okay. So it says that He got his gold. You guys listen to this. It didn't take long for Sugar Ray Seales to produce the Olympic gold medal that put him and Tacoma on the map back in 1972. As we walked down the wooden stairs at Shiloh Baptist Church on Hilltop, not far from the house on 25th and G Street where he once lived, Seales pulled it from his front pocket, seeming to know instinctively that when he handed it to me, warm, heavy, and worn from years of being shared, it would stop me in my tracks. That's my American Express card, Seales told me as he slowly unspooled the gold chain that holds the medal, perhaps not realizing that I already knew his next line, because he's used it on just about every journalist that's come his way since he won the gold in Munich 50 years ago. I never leave home without it. It's an unquestionable great quote from a legendary boxer who's offered plenty of them over the years. But the thing is, Seales, 70 and legally blind, one of the many lasting effects of the violent sport that made him famous, doesn't have a home these days. For the last 3 weeks, he's been sleeping on the bottom bunk of a bed in Shiloh Baptist's basement, where the church hosts its shelter for single men. Seales decided to make his way back to Tacoma in November, not long after the death of his wife of more than 30 years. Traveling with a stepson, he left Indianapolis, where the couple had long lived, for the place where he first made a name for himself, Tacoma. What he didn't realize was how hard it would be to find a place to live once he got back home. Any money he made during his career is long gone, and the impact of some 350 amateur fights and nearly 70 as a pro have left their mark. All he's ever been is Sugar Ray Seales. It's not supposed to be like this, Seales said, his pummeled hands still like bricks holding the medal firm. I expected a room or a place, because I took care of Tacoma. I had so many friends here. In 1972, when Seales returned from the Munich Olympics, a helicopter flew him to Cheney Stadium, where a crowd of 5,000 celebrated the young champion. 5 decades later, with the same medal in his pocket, he says he's just hoping to catch a break. Not so glamorous. Seales, who moved to Hilltop from the Virgin Islands when he was 12, was the first in a string of local boxers to bring glory in the ring to a hard-scrabble city, emerging from the famed Tacoma Boys Club and the tutelage of legendary coach Joe Clough. In 1975, two-time Olympian Davy Armstrong won a gold medal at the 1975 Pan Am Games, and a year later, Leo Randolph took home Olympic gold in Montreal. As an amateur, Seales notched more than 300 wins with 200 knockouts across the decade-long professional career that followed, including multiple bouts with future middleweight champion Marvin Hagler, who Seales battled to a draw in Seattle in 1974. He amassed a 56.83 mark. It was a party. It was a big celebration, Seales said of his life in the immediate aftermath of the Olympics. I'd done something. I'd done the best thing I could do for America. Wow, to think that in 1972, guys, this man thought he had done the best thing he could do for America was win a gold medal. And today, here we are where people don't care about the Olympics. Guys, I haven't watched the Olympics, literally really watched it. I used to watch it as a child, the fun Olympics, like the ice skating and things like that. But now, I'll be lucky to catch skateboarding on the Olympics. This guy, 50 years ago, this guy was a hero, and today he is living in a shelter. If this isn't a reason for us to learn the stock market, guys, I don't know what is. So, at the same time, the sport Seales love hasn't always returned the favor. Sometimes by cruel fate, and at other times by sheer brutality. His 1972 victory in Munich, where he became the only American boxer to win gold, was overshadowed by the murder of 11 Israelis by terrorists affiliated with a Palestinian militant group. Meanwhile, injuries sustained toward the end of his professional career left him blind in both eyes and racked with medical bills. So it wasn't even worth it, guys. He did all of that, and he has not a pot to pee in. In 84 benefit held at the Tacoma Dome, which included a performance by Sammy Davis Jr. and an appearance by Muhammad Ali, helped bring his accounts current, according to the News Tribune archives. But more recently, as the Indianapolis Star reported in 2018, Seales was living flat broke, bumming rides to a dark and dingy gym where he spent his time coaching upstart fighters. Former News Tribune sport columnist John McGrath interviewed Seales during more than 2 decades at the paper. This week, McGrath said that speaking with Seals long after his retirement from professional boxing was always a stark reminder of why boxing was once a premier sporting event in the U.S., and also the toll it took on the young fighters like Seals, including many black boxers who sought to escape poverty through their exploits in the ring. So this guy did what we did, guys. Instead of learning the stock market, he learned to box. And they boxed his ears in, and now he can't see. Wow. There's nothing like it. It's fabulous. It gets your heartbeat up and your pulse just going. It's absolutely incredible. And yet, it seems like for so many people, it leaves them in bad shape, McGrath said, noting that boxers from Seals' era didn't earn anywhere near the financial paydays that those who followed in their footsteps enjoyed. I kind of sympathize with him. You know who should be helping him? Boxers like, what is that big money, what is the boxer's name? The big guy that's in Vegas right now. I can't stand him. Every time I hear a name like Ray Seals, those two words kind of converge. And the part that's glamorous and the part that's not so glamorous. Cheap hotel rooms. For all the storybook highs and the humbling lows he's encountered over 70 years, Seals still can't help but shake his head when he stops to reflect on the latest chapter of his remarkable life. He never expected to be back in Tacoma, he says, at least not like this. Guys, he just lost his wife of 30 years. He's got a stepson here, and he's living in a shelter. After arriving in November, Seals said he spent nearly 4 months renting cheap hotels, mostly along South Hosmer Street. Guys, if you guys know South Hosmer Street in Tacoma is lined with drug addicts. So I wonder if Seals is on drugs now. Quickly exhausting his monthly Social Security distribution at a rate of $80 per night. But just as his money was drying up, Shiloh Baptist pastor Gregory Christopher appeared, having learned of the boxer's plight from his friends and family. From his office Wednesday morning, Christopher, who first met Seals roughly 20 years ago, said he offered Seals a private room in the basement, at least until he can get off the ropes, describing the decision as a no-brainer. Gregory is hoping to help the gold medal winner find an apartment he can afford, and praying it happens sooner rather than later. But if he's on Social Security, guys, this guy's on Social Security, it said. And so if he's on Social Security, he probably, he probably gets a couple, like $2,000 a month, $3,000 a month. So he's going to try to find an apartment here. But guys, in Tacoma, apartments are, you can't even get anything for less than $1,000 anymore. Not your own. You can rent a room. Rooms in Tacoma are over $1,000 also, especially if you want a good neighborhood. It's freaking wild in this world that a man who won a gold medal can't live here, guys. Where's he supposed to go live? In Mexico? I wasn't good with that. I wasn't good with that at all, Christopher said of his reaction to learning that Seals was living in hotels on Hosmer Street. It was a little personal for me, so I had to help him. Sitting nearby, Seals stressed that he isn't mad about his current situation. He's grateful he has a place to stay. He told me, and he spends his days trying to help the other men at the shelter, relying on his experience as a former special education teacher at Lincoln High School. Oh my gosh, you guys. This guy was a teacher, a special ed teacher at Lincoln High School, which is one of the biggest high schools here in Lakewood, or here in Tacoma. It's a city right nearby. Lakewood is, oh my goodness. So he taught special education, and then he won a gold medal. And this guy lives in a shelter. He's homeless. He said he draws on something Ali told him before he died. Service to others is the rent we pay for our room in heaven. Wow. This is sad. This is making me sad, guys. This is why I need every single person that can to learn with me, because I don't want to see anybody like this at 70. What do you do when you're 70? Besides go live in a shelter. Mostly, Seals said he believes God has a plan for him. He fought for Tacoma. He won for Tacoma. Now he's looking for one more victory. This is so sad. I don't need a big mansion or a big house, Seals said. I just need a place to stay. Man, homelessness is so sad. Look at him, guys. Wow. That's too bad, guys. That is too bad that that is the situation in our country today. It's very sad making. So let us take this as an example of exactly why we have to learn financial freedom, guys. We do not want to be stuck asking somebody else to provide a home for us at 70. We just can't do it. We just can't, because we don't know if there's going to be any nice people like that guy who let him live in his basement of the church. So, on that note, let's read about the different types of stocks we can invest in, because we need to get money knowledge so we don't end up like horrible sugar. Sugar Ray Seals, guys. Okay. So this first article is just a quick one from Bankrate. I kind of want to show you guys today the difference of another reason why I'm doing this, but of what we're going to find. There's a lot of articles, guys. This is Bankrate, and it's what are the different types of stock to invest in. This is Investopedia. You guys know I love Investopedia, and this just is types of stock. Understanding different stock types can benefit your portfolio. And this is the Motley Fool. Different types of stocks to invest in. What are they? And they're just 3 different of the same things. And I kind of want to read through each one of them and note the differences, guys, because the quality of the information we get matters. And I'm not saying that any of these are bad quality. I haven't read them yet. I'm not saying that any of them are great quality, but I want you to see the diverse nature of the information we're learning, because it's out there. You're going to see it. I'm going to see it. We're going to go through it. And we have to understand that some learning is superior to other types of learning. And it doesn't apply to everybody. Sometimes some people will learn better with this type of description, while the next person will learn better with this type of description. And all of my years of learning, guys, the one thing I've learned the best is that every single person learns differently. And everybody takes a minute to learn things, guys. It takes at least a minute to learn something. You have to read it. So don't be afraid. Don't be ashamed if it takes you longer than somebody else to learn, or you have to read something else, or you have to watch something else. Do not feel ashamed, guys. Everybody learns at a different rate and in a different way. And it's perfectly normal. So let's get to reading. This lady is searching for baby formula, guys. And baby formula, ooh, they are reselling baby formula on the internets to parents that need it at ridiculous rates. So, the Bankrate promise. They strive to help you make smarter financial decisions. That's what we're here for, right? So here we go. The stock market can be an intimidating place for new investors. Between the market volatility and the financial jargon, guys, financial jargon. We have to go over this a million times, and we will learn every word. We are going to know the terminology like we are doctors of the market. So, between the market volatility and the financial jargon that is thrown around regularly by commentators, it can be hard to know where to start with stocks. Fortunately, stocks aren't as complex as they seem. And while there are many different categories of stocks, they all have a lot in common. Here's what you should know about the different types of stocks. A common stock. A common stock is probably what you think of when you're looking to invest in stocks. Common stock gives you an ownership stake in the business. Remember, you own equity, a little piece of the pie, with the ability to vote on key matters such as electing the board of directors or adopting certain policies. Okay? When people hear the word stock, they often think of elaborate charts, like the one on my thumbnail, guys, and flashing prices that move around during the day. But when you buy a stock, you're purchasing a stake in a real business. And your long-term returns will be driven by the earnings and overall success of that company. Earnings growth will contribute to a higher share price for common stock owners and enable the company to share those earnings with shareholders in the form of dividends. And dividends are a great way to invest, guys, because you get the money without selling stock. Remember, you get the money that the stock goes up. It is not the stocks that you sell. You actually get the money that the company made, equity. So a preferred stock is more like a bond than it's a stock. Typically, you won't have any voting rights, but you will receive dividend payments ahead of common stockholders. Preferred stock is issued at par value, and the shares are redeemed at maturity. So you don't have the opportunity for price appreciation you do with common shares. Your return will come primarily from the dividends you receive. Preferred stock may be redeemed prior to maturity, and some preferred shares are convertible into a certain number of common shares. While the opportunity for significant gains is much lower with preferred stock than common stock, the risk is considerably lower too. So I read somewhere that preferred stock is usually the stock that people want to live off of. Like, they have a big portfolio, so they have some stock that is placed in high volatility so that they can be making bigger money, but that's a small amount. Then they put a lot of their money in a preferred stock to make dividends off of it. So let's say they put $1 million in a preferred stock or a bunch of different preferred stocks, and the dividends pay them a couple thousand a month. You could live off the couple thousand a month and then keep your money in the stocks growing. So your money is making money for you and you're actually living off of it. That's the goal, guys. Have your money make money for you to live off of. So, lower risk, higher risk, lower risk, large cap stock. The universe of common stock is quite large. So one way to divide that up is by separating companies based on their market capitalization or the total value of all their outstanding shares. While there is no clear definition of a large cap stock, they are generally companies with market caps of 10 billion or more. Large cap stocks are typically established companies with proven records of profitability, and the best of them are sometimes called blue chip stocks. Blue chip stocks are companies with long-term track records of success and promising futures. They tend to be well-established leaders in their sector, and in many cases are huge consumer-facing brands like Walmart, Microsoft. Okay. Investors looking to invest in large cap stocks might consider purchasing an index fund that tracks a large cap index, such as S&P 500. So this is an index, is an ironic name for one of the best collections of stocks in the world. One that has returned investors about 10% annually over long periods of time. You hear that? Put money in long and it stays there, guys. It's like magic for rich people. Speaking of magic, do you like magic? At nights, I play the best magic game that there is on live right here on YouTube. Check it out this evening if you don't have nothing better to do. I will be live playing Hogwarts Legacy, literally one of the best games ever. Check it out. So, as you move down in market cap, mid-cap stocks are next, and these companies typically fall between 2 billion and 10 billion. These companies are established, but may still be in the early stages of their growth and could come with the potential for meaningful price appreciation. Many of today's large cap stocks were once mid-cap stocks before growing to new heights. Mid-cap stocks help to diversify your portfolio away from the large cap stocks most people typically focus on. Broadly speaking, mid-cap stocks may come with less risk than small cap stocks, but more risk than large cap stocks, although it will always depend on the specific company you're looking at. So small cap stocks. So we have three caps, guys. Small, medium, large. Larger, big guys, blue chip companies like Walmart. Then mid-class and small cap, or cap, not class. Small cap stocks can be one of the most rewarding areas of the market because they give you opportunity to identify a company loaded for future growth. And this, guys, is where Buffett sits. Warren Buffett loves to get him a small cap stock and buy it out and own it. Totally buy it. Lets the owners keep running it, but he invests in it so heavily that he owns the majority of the business, and then he makes billions. Okay. Make sure my coffee's finished. One second. Alrighty. So, Warren Buffett loves him as small cap stock guys, right? So, small cap stocks typically have market caps less than 2 billion, and they may still be in the early stages of their growth. Because of their small size, Small cap stocks can sometimes be overlooked by fund managers, creating the potential to find hidden gems before the rest of the investment world. And that is what Warren Buffett is a genius at. The potential for high returns does come with greater risk, however. Small companies may not be profitable and may have to rely on outside funding to sustain their operations. They can be particularly susceptible to economic downturns when capital dries up, and they may not be able to fund their business. So it's especially important to diversify when investing in small caps. So that is the same as anything else, guys. If you have high volatility, if you can lose a lot of money, you use your risk management, right? We're going to learn risk management for this reason. Growth stocks are one of the most exciting areas of the stock market, but buying them and earning high returns isn't as simple as the name suggests. Because high growth companies can be very rewarding to investors, their prices can sometimes get bid up to overvalued levels, where investors won't earn satisfactory returns. But if you're able to purchase a growth stock at a compelling price, you may be able to ride its success for many years to come. Companies like Apple, Alphabet, and Tesla have all rewarded investors handsomely in recent years, but only time will tell if their growth can be sustained. Growth stocks are often presented as the opposite of value stocks, but growth can be undervalued by the market. Growth is merely a component of value. So a value stock might be considered the less exciting cousin of growth stocks, but that doesn't mean they're any less rewarding for investors. Just as growth stocks can get bid up to unsustainable prices, other stocks can get beaten down to significantly undervalued levels. The definition of a value stock can vary widely, but when focusing on quantitative metrics, they tend to have lower valuation multiples and lower growth rates than the growth stocks. So we are learning a couple things here that we didn't know, guys. Valuation multiples, we haven't heard that yet. When researching a new stock to invest in, you'll want to understand the stock's underlying business. Here are 8 financial ratios to help you with the analysis. And okay, valuation multiples maybe are talking about the different types of ratios we learn, like the PE ratio and things like that, guys, and we are going to go over that. Some of the world's most successful investors, including Warren Buffett, have amassed their wealth by buying stocks below their intrinsic value. Be sure to understand the specifics of any stock you buy. And that, guys, is why you have to learn basic accounting, and we will be doing more of it so you can understand financial statements, so you can understand the specifics, if I could talk, guys. Some stocks that look to be a bargain end up being cheap for a reason, and their business declines, dragging the stock price with it. Foreign stocks are issued by companies that are based outside of the United States. Some of these companies may have stocks that trade on U.S. stock exchanges to take advantage of the country's robust capital markets, but their revenues and profits are still generated mostly elsewhere. Most U.S. investors tend to hold companies that are headquartered in their home country, and for good reason. The U.S. has well-established capital markets and is home to some of the most successful companies in the world. However, adding international stocks to your portfolio can help diversify your investments and get a stake in emerging companies around the world. So, guys, risk management and diversification, if those aren't the two darn words we hear the most, risk management, diversification. You diversify your portfolio and you have good risk management so that you don't lose your money. We are going to learn that because there's people that have been playing in this stock market since the Buttonwood Agreement in 1792. Same money, guys, old money, same money, the money that runs the world. So we can do this. It was put here for us. They made it really hard to learn. And so here we are learning it from the bottom up. While there are many different types of stock, they all represent stakes in actual businesses. No company is inherently a growth or value stock and will likely move between several different categories throughout its life. Always be sure to analyze the underlying business before purchasing the stock to get a sense of the company's competitive position and valuation. You can also purchase baskets of different types of stocks by using ETFs and mutual funds that track various indexes. Funds may hold value or growth stocks of all different market caps. Funds are a great way to get exposure to a certain area of the stock market without having to do a ton of research on individual companies. Thanks, Brian. So Bankrate, they wrote that one. Now let's jump over to, this one's a little bit longer. This is which one's longer? This one's good too. Motley Fool is good, guys. I haven't used it yet here with us, but we're on day 6. I mean, there's still so much that we haven't touched, so we will see it. So understanding different types of stocks can benefit your portfolio. And if we want to get a portfolio, we have to know what kind of stocks. So when most people think of stocks, they typically think of publicly listed shares traded on the stock exchange. However, it's important for investors to know the different type of stocks available. We got that, guys, right? We're going to understand them. So understand their unique characteristics and be able to determine when they may represent a suitable investment. Below, we outline the various stock categories, aiming to take the confusion out of differing stock classes on offer to investors. Okay, so the classes of stock. We got to understand different stock categories. Okie dokie. Understanding different stock categories can help investors make more informed investment decisions and reduce portfolio risk. Preferred stock gives holders regular dividend payments before dividends are issued to common shareholders, but doesn't provide voting rights. Income stocks provide regular income by distributing a company's profits or excess cash through dividends that are higher than the market average. Blue chip stocks are shares of well-established companies with a large market capitalization. ESG stocks, these are ones that Bankrate didn't tell us about. ESG stocks emphasize environmental protection, social justice, and ethical management practices. So, common stock, sometimes referred to as ordinary shares, represents partial ownership in a company. This stock class entitles investors to generated profits, usually paid in dividends. Common stockholders elect a company's board of directors and vote on corporate policies. Holders of this stock class have rights to a company's assets in a liquidation event, but only after preferred stock shareholders and other debt holders have been paid. Company founders and employees typically receive common stock. On the other hand, preferred stock, or preference shares, entitles the holder to regular dividended payments before dividends are issued to common shareholders. As mentioned above, preferred shareholders also get repaid first if the company dissolves or enters bankruptcy. Preferred stock doesn't carry voting rights and suits investors seeking reliable passive income. So if you just want your money working for you, bringing you money home for the month to use, you can get yourself a preferred stock. It will pay payments before it pays other people, so you're more likely to get paid if they run out of money, dissolve, or go bankrupt. It's a passive income, guys, making your money work for you instead of going out and working for your money. That is where we all should be aiming to go, because we do not want to be like Sugar Ray Seals sitting there at 70 still going out to work for our actual money, right? So, many companies offer both common and preferred stock. For example, Alphabet, Google's parent company, lists Alphabet Google, its class of common stock, and Alphabet Inc. Goog, its preferred class. Okay, Google, common, Goog, Alphabet, preferred. Got it. So, growth stocks versus value stocks. As their name suggests, growth stocks refer to equities expected to grow at a faster rate compared to the broader market. Generally, growth stocks tend to outperform during times of economic expansion and when interest rates are low. For instance, technology stocks have significantly outperformed in recent years, fueled by a robust economy and access to cheap funding. Cheap funding from SBB Bank, guys. Investors can monitor growth stocks by following the themed exchange-traded fund, the SDD portfolio S&P 500 Growth ETF, SPYG. I read a lot of people saying that they only trade these guys, that this is all that they mess with because it's easier. Growth stocks, value stocks. Conversely, value stocks trade at a discount to what a company's performance might otherwise indicate, typically having more attractive valuations than the broader market. Value stocks, such as financial, healthcare, and energy names, tend to outperform during periods of economic recovery, as they usually generate reliable income streams. Investors can track value stocks by adding the SPDR portfolio S&P 500 to their watch list. I want to add this to my watch list. I'm going to write it in my little book, guys. Get yourself a little book and have it ready while we're learning. Let me find a page. Got a page right here for notes. Add SPYV to watch list. Can't go wrong with a pen and paper, guys. Write yourself little notes while we're learning. Growth stocks have outperformed value stocks by about 5.93% over the past 10 years. Look at that, guys. It's a fast fact. Income stocks are equities that provide regular income by distributing a company's profits or excess cash through dividends that are higher than the market average. Typically, these stocks, think utilities, have lower volatility and less capital appreciation than growth stocks, making them suitable for risk-averse investors. So those are people who don't want risk, who seek a regular income stream. Investors can access income stocks through the Amplify High Income ETF YYY. And I want to check out YYY too, guys. That's pretty interesting. These are less volatile. Blue chip stocks are well-established companies that have a large market capitalization. They have a long, successful track record of generating dependable earnings and leading within their industry or sector, like Walmart, guys. Conservative investors may top-weight their portfolio with blue chip stocks, particularly in periods of uncertainty. Like right now, guys, people are investing in they're top weighting their portfolio, and top weighting just means that they're making it top heavy. They're putting a lot of blue chips in because they're reliable, guys. They've been reliable for years, so they're reliable now. Things are going down, so let's invest in reliable stuff, right? Makes sense. Several examples of blue chip stocks include computing giant Microsoft, fast food McDonald's, and energy bellwether ExxonMobil. Things that you guys, if you got a lot of money, invest in Microsoft. If you got a lot of money, invest in Exxon. Of course. McDonald's, of course. Okay. Cyclical and non-cyclical stocks. Cyclical stocks are directly affected by the economy's performance and typically follow economic cycles of expansion, peak, recession, and recovery. They usually display more volatility and outperform other stocks in times of economic strength when consumers have more discretionary income. Guys, and discretionary income is the amount of an individual's income that is left for spending. Discretionary income. Examples of cyclical stocks include iPhone maker Apple and sports gear giant Nike. Investors can add cyclical stocks to their portfolios by purchasing the Vanguard Consumer Discretionary ETF. On the other hand, non-cyclical stocks operate in recession-proof industries that tend to perform reasonably well irrespective of the economy. Non-cyclical stocks usually outperform cyclical stocks in an economic slowdown or downturn, as demand for core products and services remains relatively consistent. The Vanguard Consumer Staples ETF provides exposure to large cap defensive stocks like personal care giant the Procter & Gamble company, because toilet paper will always be needed, guys. You guys remember the pandemic when they shut us down and everybody ran out of toilet paper? Procter & Gamble. As well as beverage makers Pepsi-Cola and the Coca-Cola company. These are staples because this is our country, guys. We wipe our butts, we drink our Pepsi and our Coca-Cola. Wow. Defensive stocks generally provide consistent returns in most economic conditions and stock market environments. These companies typically sell essential products and services, such as consumer staples. Those things we need, guys. Toilet paper, healthcare, and utilities. Defensive stocks may help protect a portfolio from steep losses during a sell-off or a bear market. And a bear market is going down. Remember, guys, what's a bear market? Securities fall 20% or more. So you're going down. You're bearing down. And then a bull market, remember, a bull has horns, so it goes up. It'll throw you up in the air. A defensive stock may also be a value, income, non-cyclical, or a blue chip stock. Telecommunications giant AT&T and healthcare multinational Cardinal Health are among the defensive stocks included in the core holdings of the Invesco Defensive Equity ETF, or DEF. Defensive stocks are less likely to face bankruptcy because of their ability to generate consistent returns during periods of economic weakness. Okay, guys, we are going to continue on and learn more about IPO stocks. I just have to take a quick break. I will be right back. Just 1 second, my friends. 1 second. All right, neighbors, I am back. I had to take that sweater off, and then you sit here and drink a whole coffee quickly so it doesn't go cold, and then you have to go to the bathroom. Huh. So, let's get back. So, when a company goes public, it issues stock through an initial public offering, IPO. IPO stock typically gets allocated at a discount before the company's stock lists on the stock exchange. It may also have a vesting schedule to prevent investors from selling all of their shares when the stock commences trading. Market commentators also use the term IPO stocks when referring to recently listed stocks. Investors can monitor for upcoming IPOs through the NASDAQ website. So, new stocks. Penny stocks. A penny stock is equity valued at less than $5 and is considered highly speculative. Although some penny stocks trade on major exchanges, many trade through the OTCQB. What's that? The venture market. It's called the venture market. It's mid-tier of the over-the-counter market for U.S. stocks. It was created in 2010, consists mainly of early-stage and developing U.S. and international companies that are not yet able to qualify but are speculative as the lowest tier pink sheets. Okay. Equity market. Okay. Parting stamps pass a bid test and undergo annual certification. Okay. So it's like baby stocks. Okay. Let's wait for this to go away. All right. Investors should consider using limit orders when placing buy and sell orders in penny stock, as they often have a large spread between the bid and ask price. So we are going to learn more about this limit orders and what a large spread is, guys, when we are reading. But a limit order is different than a market order, and they are both orders you can place when you are buying shares, and we are going to go through that. And then a spread is the difference between the bid and the ask price. Bid is what you're willing to bid on it, and the ask price is what the seller is asking for it. Penny stocks shot to prominence in popular culture after the release of The Wolf of Wall Street, a movie about a former stockbroker who operated a penny stock scam. Investors who want to take a bet on penny stocks should look at the iShares Microcap ETF. I like that. I want to look at penny shares. Write that down in my book, guys. So I'm going to check it out later. So ESG stocks, environmental, social, and corporate governance stocks, emphasize environmental protection, social justice, and ethical management practices. For instance, an ESG stock may be a company that agrees to reduce its carbon emissions at a greater rate than national industry targets, or one that manufactures equipment for renewable energy infrastructure. ESG stocks have gained popularity with millennials in recent years, a socially conscious generation who are more likely to invest in things they believe and support. Investors can access ESG stocks by adding the Vanguard ESG to their portfolio. What is the main difference between common stock and preferred stock? Preferred stock gives holders priority over a company's income, but does not provide voting rights like a common stock. So what type of investors do income stocks suit? Income stocks suit risk-adverse investors who seek regular income through dividend payments. So, see? Income stocks, guys. If you are someone who seeks regular income through dividend payments with lower risk because you're risk-averse, you seen that? There's things for everybody. We just have to learn about them and use them. What's a key characteristic of defensive stocks? Defensive stocks generally provide consistent returns in most economic conditions and stock market environments. So, right now, guys, we need defensive stocks, right? They're for any market. That's good. Where can I buy speculative penny stocks? Investors can buy speculative, and this means, guys, what? Just speculating that they're going to be good? So, you can buy those at an OTC market operated by OTC Markets Group. Understanding the key differences between stock categories helps investors make better informed investment decisions and manage risk within their portfolios. as well as buying different types of stocks directly. Investors can gain cost-effective exposures to theme stock types through ETFs. So, we all know that sinking feeling as portfolios slide further into the red, but not Masterworks investors. Oh, they're trying to sell you something at the very end. I don't want to read that. I don't need to buy anything. Okay, so that was Investopedia's take on it. Thanks, Timothy Smith. Look at Timothy Smith. 20 years of experience writing as a writer and a trader. Okay, so that was Investopedia. Let's check out, before we go, let's check out what Motley Fool has to say about it. Theirs is about as long as Investopedia's. And they all kind of say the same thing, but in a different way. And that's helpful, too, because sometimes it just clicks in a different way. So investing in the stock market has historically been one of the most important pathways to financial success. As you dive into researching stocks, you'll often hear them discussed with reference to different categories of stocks and different classifications. Here are the major types of stocks you should know. Common stock. Regular stock, guys. You own equity and you get a vote. Preferred stock. You don't get a vote. You earn the equity, or you earn derivatives. You get derivatives first. Large cap stocks. These are big guys like Walmart. Mid cap stocks. These are medium guys, under 10 billion. These are little guys, under 2 billion. Small cap. Domestic stock, that means here. International stock, that means afar. Growth stocks. These mean stocks that grow abnormally. Value stocks, what are these? I don't remember what value stocks are, guys. I don't remember most of these. Dividend stocks, you get off dividends. Non-dividend stocks, you don't give dividends. Income stocks, as you can live off the dividends. Cyclical stocks are stocks that go up and down. These are ones that don't typically go up and down. These are like Apple, where it's going up, it's going down, it's going up. This is like Exxon. Safe stocks, blue chip stocks, those are like Walmart, like the big boy stocks, and penny stocks. So look, guys, there's 19 different listed here, and right off the top of my head, I knew a lot of them, not all of them. I don't even remember what an IPO stock is. The more we hear it, the more we'll learn it, though, guys. You have to hear things multiple times in order for it to stick in your brain. How many times have you heard your name in your life? Never forget that. Let's learn this like we know our name. I'll keep saying it until you know it. Okay, so common and preferred stock, they're the most stock that people invest in is common stock. Common stock represents partial ownership in a company, with shareholders getting the right to receive a proportional share of the value of any remaining assets if the company gets dissolved. Common stock gives shareholders theoretically unlimited upside potential, but they also risk losing everything if the company fails without having any assets left over. Preferred stock works differently, as it gives shareholders a preference over common shareholders to get back a certain amount of money if the company dissolves. Preferred shareholders also have the right to receive dividend payments before common shareholders do. The net result is that preferred stock as an investment often more closely resembles fixed income bond investments than regular common stock. Often a company will only offer common stock. This makes sense, as that is what shareholders most often seek to buy. So stocks also get characterized by their total worth of all their shares, which is called market capitalization. Companies with the biggest market capitalizations are called large cap stocks, with mid cap and small cap stocks representing successfully smaller companies. There's no precise line that separates these categories from each other. However, one often used rule is that stocks with market capitalizations of 10 billion or more are treated as large caps, with stocks having 2 to 10 billion qualifying as mid, and below 2 billion small caps. Large cap stocks are generally considered safer and more conservative as investments, while mid cap and small caps have greater capacity for future growth but are riskier. However, just because some two companies fall in the same category doesn't mean they have anything else in common as investments, or that they'll perform in similar ways in the future. Domestic stocks and international stocks. You can categorize stocks by where they're located. For purposes of distinguishing domestic U.S. stocks from international stocks, most investors look at the location of the company's official headquarters. However, it's important to understand that a stock's geographical category doesn't necessarily correspond to where this company gets its sales. Philip Morris International, PM, is a great example. Its headquarters are in the U.S., but it sells its tobacco and other products exclusively outside the country, especially among large multinational corporations. It can be hard to tell from business operations and financial metrics whether a company is truly domestic or international. So, growth stocks and value stocks. Another categorization method distinguishes between two popular investment methods. Growth investors tend to look for companies that are seeing their sales and profits rise quickly. Value investors look for companies whose shares are inexpensive, whether relative to their peers or to their own past stock price. So, growth stocks tend to have a higher risk level, but the potential returns can be extremely attractive. Successful growth stocks have businesses that tap into strong and rising demand among customers, especially in connection with longer-term trends throughout society that support the use of their products and services. Competition can be fierce, though, and if rivals disrupt a growth stock's business, it can fall from favor quickly. Sometimes, even just a growth slowdown is enough to send prices sharply lower, as investors fear that long-term growth potential is waning. Value stocks, on the other hand, are seen as being a more conservative investment. They're often mature, well-known companies that have already grown into industry leaders and therefore don't have much room left to expand. Yet with reliable business models that have stood the test of time, they can be good choices for those seeking more price stability while getting some of the positives of exposure to stocks. IPO stocks are stocks of companies that have recently gone public through an initial public offering. IPOs often generate a lot of excitement among investors looking to get in on the ground floor of a promising business concept. But they can also be volatile, especially when there's disagreement with the investment community about their prospects for growth and profit. A stock generally retains its status as an IPO stock for at least a year and for as long as 2 to 4 years after it becomes public. So, dividend stocks. Many stocks have dividend payments to their shareholders on a regular basis. Dividends provide valuable income for investors, and that makes dividend stocks highly sought after among certain investment circles. Technically, paying even 1 cent per share qualifies a company as a dividend stock. However, stocks don't have to pay dividends. Non-dividend stocks can still be strong investments if their prices rise over time. Some of the biggest companies in the world don't pay dividends, although the trend in recent years has been toward more stocks making dividend payouts to their shareholders. Income stocks are another name for dividend stocks, as the income that most stocks pay out comes in the form of dividends. However, income stocks also refer to shares of companies that have more mature business models and have relatively fewer long-term opportunities for growth, ideal for conservative investors who need to draw cash from their investment portfolios right now. Income stocks are favored among those in or nearing retirement. So this is our future, guys. This is where we want to hit. We want to eventually get so good at trading that we make so much money that we just invest long-term in dividend stocks that start paying for our life. That's my goal. Cyclical stocks and non-cyclical stocks. I'm talking 70 though. Like, I want to play in the money market for a long time, and then I want to sit back and live off of my knowledge. National economies tend to follow cycles of expansion and contraction, with periods of prosperity and recession. Certain businesses have greater exposure to broad business cycles, and investors therefore refer to them as cyclical stocks. Cyclical stocks include shares of companies in industries like manufacturing, travel, and luxury goods, because an economic downturn could take away customers' ability to make major purchases quickly. When economies are strong, however, a rush of demand can make these companies rebound sharply. By contrast, non-cyclical stocks, also known as secular or defensive stocks, don't have those big swings in demand. An example of non-cyclical stocks would be grocery store chains, because no matter how good or bad the economy is, people still have to eat. Non-cyclical stocks tend to perform better during market downturns, while cyclical stocks often outperform during strong bull markets. So, there we go. Safe stocks are stocks whose share prices make relatively small movements up and down compared with the overall stock market, also known as low volatility stocks. Safe stocks typically operate in industries that aren't as sensitive to changing economic conditions. They often pay dividends as well, and that income can offset falling share prices during tough times. You'll often see stocks broken down by the type of business they're in. The basic categories most often used include stock market sectors. So the sectors are communication services, telephone, internet, media, and entertainment companies, Consumer discretionary, retails, automakers, hotel, restaurants. Consumer staples, food, beverage, tobacco, household, personal products. Energy, oil, gas, production companies, pipeline, gas station. Financial, banks, mortgage operators, finance specialists, insurance, brokerage companies. Healthcare, health insurers, drug and biotech companies, and medical device makers. Industrial, airline, aerospace, defense, construction, logistics, machinery, railroad companies. Materials, mining, forest products, construction materials, packing, chemical companies. Real estate investment trust, real estate management and development companies. Technology, hardware, software, semiconductor, communications equipment, and IT services. Utilities, electric, natural gas. I guess it's national if it's here in the country, right? Water, renewable energy, and multi-product utility companies. Okay, so ESG investing refers to an investment philosophy that puts emphasis on environmental, social, and governance concerns. Rather than focusing entirely on whether a company generates profit and is growing its revenue over time, ESG principles consider other collateral impacts on the environment, company employees, customers, and shareholder rights. Tied to ESG's governing rules is socially responsible investing, or SRI. Investors using SRI screen out stocks of companies that don't match up to their most important values. However, ESG investing has a more positive element rather than just excluding companies that fail key tests. It actively encourages investing in the companies that do the best things, with evidence showing that a clear commitment to ESG principles can improve investing returns. There's a lot of interest in that area. Finally, there are stock categories that make judgments based on perceived quality. Blue chip stocks tend to be the cream of the crop in the business world, featuring companies that lead their respective industries and have gained strong reputations. They typically don't provide the absolute highest returns, but their stability makes them favorites among investors with low tolerance for risk. And then penny stocks. By contrast, penny stocks are low-quality companies whose stock prices are extremely inexpensive, typically less than $1 per share. With dangerously speculative business models, penny stocks are prone to schemes that can drain your entire investment. It's important to know about the dangers of penny stocks. You probably heard that portfolio diversification is important for developing strong, stable investments. Keep all of these stock classifications in mind as you plan for diversity. Investing across companies of different market capitalizations, geographies, and investing styles contributes to a well-balanced portfolio. And we learned all of them, guys. Look at that. And that was it, guys. Different types of stocks. Yay! Okay. I think that that's enough for the day. We learned about Sugar Ray Seales and his issue with homelessness and why we need to learn even more about the stock market so that we don't end up like Sugar Ray Seales, guys. Okay? At 70, living in a shelter. So, we're going to get financially straight, guys. We're going to do it one day at a time, right here, every single Monday morning. Let me try again. We're going to do it right here, guys. Every single morning, Monday through Friday. I'm going to be here. You're going to be here. And we are going to get smart. We're going to learn everything there is to learn about the stock market and what it takes to trade, make a portfolio, diversify it, do risk management, and make money. Brian Baker's on our team. Tony Smith is on our team. And who wrote this, guys? Who wrote it? Dan Kaplinger. He's on our team. It's a money team, guys. And if you want to be a part of the money team, all you have to do is dedicate a couple hours to learning. And it might be a couple hours a day, guys. It might be a couple hours a week. But what's a couple hours? People spend a couple hours scrolling through their phone. How many times have you mindlessly scrolled through your phone? Add those minutes up. Put them into the stock market. Let's get our finances right before we're 70 living in a shelter like a man who won a gold medal in 1972. A gold medal. Living on the streets, guys. So, I'm not trying to scare you. It's a warning. It's a good warning too, guys, because things are crazy in this world. It's time to get right. I'm glad you're here to get right with me. You can check out all the other videos in the folder titled Stock Market Learning. If you're interested in gaming, I have a bunch of other folders with gaming. And I also, every day we play some Fortnite Live on here. And we also, at night, play some magical not Harry Potter, guys. I don't know why I always call it that. Hogwarts Legacy. Hogwarts. Guys, I am a witch. Yes, in Hogwarts Legacy, I am the cutest little witch. Come check it out tonight, this evening. I will be live playing Hogwarts Legacy, and it is the most magical game. Are you a gamer? Do you want to be a gamer? Do you like watching games? I didn't used to be a gamer, guys. I just watched people play games, and now I'm playing them. It's like I've been infected, and now I'm the gamer. But it's so much fun, and it is something to take your mind off of all of this, the day of learning, and then you go and play in the magical world of Hogwarts. It's perfect. So anyway, guys, I had a great morning. We did about a little over an hour of learning, with the exception of my break, guys. I did have to take a bathroom break and take off my sweater. Man, I was sweaty. It's so cold in the morning when I wake up, and then I put on my cashmere sweater. I call it my Harry Potter sweater, and put on my Harry Potter sweater and some pants and some socks. And then when I get going, I get so darn hot. But I guess that's life, guys. So I'm going to call it a day. We'll call this a stream, and I will be back here tomorrow, guys, Friday, and we will do our final class of the week. So I'm not going to give any homework. It's Friday tomorrow. We'll probably have a fun day. That's right. Come tomorrow for the fun day. If you haven't seen the previous videos, like I said, this is what are we on? Day 6, guys? So if we are day 6, go watch the previous 5. They are anywhere from about a half an hour up to an hour and a half, I think. And they are extremely helpful in learning. We just go over everything, and you get to hear it a bunch of times. And you don't have to read the article, guys. I read it for you. So just sit back, listen, and enjoy yourself. It's great life. I will see you guys tomorrow. Have a great day. Same time, same place. Be there or be square. See you later, neighbors. Bye.